think bias is an important thing, right? We have goals and things we're looking for. We want to find that antelope. We want to find that deal. You can only do that if you have an objective that you're pursuing. Otherwise, you're in complete chaos and just like raw data feed from the universe. So I think bias is hugely important, but you do need to be creative about it. Our 3 ultimate biases or objective functions. 1 is the founder irreplaceably competent. 2, is this a fundamental breakthrough that's applicable to multiple areas? 3, is this an overlooked area? So
All right, Liam, thank you for joining the Liberty Ventures podcast. I want to dive right into it and actually give you a chance to share what your journey has been getting into the venture capital space and tell everyone who may not know much about you so far just where you're at the moment.
of course, Alex, really appreciate it. And thank you for having me on your podcast. I'm based out of Pittsburgh, Pennsylvania, was born and raised. And the way I got into Reinforced Ventures was I was working in a previous data science role during COVID. First we were helping people, saving lives, and then it was just kind of moving data back and forth. Felt like I lost the mission and just started iterating over ways to have fun because it seems having a life plan wasn't working out. And within a few weeks, Carnegie Mellon's alumni network needed someone to interview entrepreneurs over Zoom for COVID. So I volunteered for that. That was 2 hours of fun per week. A few weeks later, they asked if I could help manage the organization. It was called Tepit at the time. And then it was up to 5 hours of fun per week. Met my current partner, Ewan Guttridge, was helping him with due diligence on some of his angel investing deals and was then having 10 hours of fun per week. He then offered me Carrie, which was 15 hours. He needed me to put in more time. I asked my wife. She said, "Are you getting paid?" I said, "Yes." She said, "What?" I said, "Carrie." She said, "No." And she said, "But it seems you're having a lot of fun." So graciously, marriage is a negotiation, right? And having 15 hours of fun. It's going very well. It's a lot more than 0 hours of fun. And after a few months, I felt like I could jump from 15 to 40 hours of fun. Reached out to my buddy Scott in North Carolina and said, "Hey, Scott, I do venture capital due diligence. You do venture capital due diligence. I don't get paid. You do get paid. How do I, just cover my groceries with this, right? Because it seems to be a good fit for me. Short attention span, very cynical, those sorts of things." And he said, "Look, I'm not doing that anymore, but I do have a boutique consulting business that helps private equity firms with technical due diligence. We meet with the CTO, we go over cybersecurity best practices, et cetera, kind of like 2 to 4 week engagements per deal. Do you want to join me?" So now I'm up to 40 hours of fun. Did that for a little over a year, scaled up the team, and wanted to get back into venture. My partner Ewan, who I'd been doing the angel deals with, decided to launch a fund in October 2021, and the two of us have been having more than 40 hours of fun per week ever since.
So what I really appreciate about the way you're framing this is that most people think once you get into venture capital, the money just starts flowing in, everyone is wealthy, and there's a lot of upside right away. When really it's about taking risks, and if there is a payout from venture, it's down the line. It takes a while for this to come about. So you do need to both believe in yourself and your thesis in order to stick with it, but also have fun. And you've mentioned that word many times already. So what is it
Yes,
about venture that's fun for you?
optimized fun, not maximized fun, right? Otherwise, drugs would be involved. But it definitely has been incremental risk. Just to touch on your first point, the Ewan started angel investing, I think back in 2012, 2013, started building up that track record. We went from that to running syndicates with maybe 12 to 15 friends. That syndicate now has 1,500 friends. And then after doing that, the syndicate grew into a rolling fund where people commit per quarter. And then just this year, we're launching like our first actual 10-year fund. So, when you have a big, squishy, risky objective, or search path that you're going through without an objective, um, segmenting that risk into as parts as possible is super important. As far as the things that I enjoy about venture capital, um, it requires a lot of conceptual thinking. So most of what these companies are doing is still very embryonic and early. My dad was a detective, an interrogator, and so I sometimes joke that when he's interrogating people, maybe half of them are lying, half are telling the truth. For me, every entrepreneur I interrogate is lying, right? They have some dream, they have something they're going after, and the question is, do I want to believe that lie and help them make that thing real? That requires a lot of creative thinking because you're looking at the financials, you're looking at the go to market, you're looking at the technical gaps. You're like, it's not quite there, but could it be there in one step or one iteration? Or does it require all these other things that are contingent risks that you can't control or mitigate? And then the last thing is critical thinking and just being able to, while being very optimistic, being cynical and being like, okay, what's the worst case scenario? If this goes to zero, why will it go to zero? Is this the right person to do it? And so, being conceptual, being creative, and being critical are three pretty core attributes to what I do. And so I get to express that during at my job.
So let's dig into those three characteristics because I think this is really important. I think it's pretty obvious what being critical means, but talk a little bit more about the other two. How do you approach being conceptual and creative in venture?
For sure. So for conceptual thinking, there's different aspects to it. So there's the market mapping of who are your competitors, what are their approaches, are you, even if you have the same technical approach, are you competing for the same customers, right? So we invest in a number of robotics companies. A number of robotics companies make robot arms. Just because one company has a robot arm and another company has a robot arm doesn't mean they're competing for that same invoice, for that same purchase order with the same customer, right? And so being able to fit those in your mind together. Um, if the technology they're building has a engineering gap that they can fix and then they own the market, right? So high technical risk with low market risk is something we often look for and deeply value. A number of companies don't have that. Instead, what they have is we have our own technical gap, but we also need this other startup to fill their technical gap. And then with the ecosystem, we can grow. So you see that in a number of bubbles, like in nuclear energy and in the blockchain space, where, okay, maybe we have our zero knowledge proof, but we also need this other startup to solve the issue they're working on. And so it's not just us closing this gap, but we need them to close the gap. And that doesn't just double the risk, it increases it tenfold. Regarding the creative thinking, um, I think a lot of it is around the dangers of pattern matching. So this is very much a pattern matching game where you're like, okay, we need Steve Jobs, we need Wozniak, and we bring the two together, right? And that makes the perfect founding team. Um, but you need to be able to have enough awareness of your presuppositions to double check them. I really don't like the word bias because I think bias is an important thing, right? We have goals and things we're looking for. We're hunting, right? We want to find that antelope. We want to find that deal. And so it's like you can only do that if you have an objective that you're pursuing, right? Otherwise, you're in complete chaos and just like raw data feed from the universe. So I think bias is hugely important, but you do need to be creative about it and stop and wonder, okay, is Jobs and Woz the ideal founder archetype? Are there scenarios where maybe a solo founder is better than that, right? And so thinking creatively about, for instance, in tech bio, where it's like you need someone who understands the patient, who understands the software, who understands the biology, who understands regulatory approval and pharmaceutical partnerships. Maybe that all needs to be in the same brain. Maybe if those neurons aren't connecting, you're not going to make those connections because the product and everything else that goes around it is so much more tightly tied together in therapeutics that is in other spaces. So that's probably where creativity is most key. Just doubting yourself regularly.
So it's both recognizing that you have a bias, and that can be a good thing, but being willing to check that at the same time. And you're starting to talk about some of the industries that you're involved with, and I'm curious to if you can expand upon what you know are your biases and which biases you think are good ones to have and the ones that you're checking regularly.
Yes, great question. Our three ultimate biases or objective functions are: one, is the founder irreplaceably competent? Two, is this a fundamental breakthrough that's applicable to multiple areas? And three, is this an overlooked area? So I'll define all those and then I'll explain what the you know alternative scenario or Iron Man for each of those would be.
Please.
So irreplaceable competency would be: is this the world's best person to start this company? The question founders can't really prepare for is, if you get hit by a train, like, who can I hire to replace you, right? And sometimes they really struggle to come up with an answer, and they think they did a bad job, but actually that's exactly what I want. I want to know that the intersection of your skills, your personality, make you the world's best person to start the company, which is the best moat that someone can have. Second to that, fundamental breakthrough. We measure how big of a deal your technology and your product is based on the breadth of applicability. So we have a company called eStat. They have a new clutch system that uses static electricity. I'm going to get this wrong, but it's like 10 times more powerful, 100 times lighter, uses 1,000-fold less energy than traditional clutches. And it's like, well, drones need that because they're fighting gravity all day long. High torque power tools, low torque power tools need that so that people don't break their wrists, right? Electric vehicles need that. There's thousands of use cases. And so it's like, okay, like, some PhD at CMU came up with the first new clutch in 100 years. Pretty broad applicability. And at least one of those markets will take off. And then the third kind of core bias for us is overlooked area. So we placed our investments in AI infrastructure a few years ago. We placed our investments in nuclear. We placed our investments in antibody drug conjugates, right? There are things that are really trendy and exciting now. And we invest while they're still overlooked so that we can allocate for the future without predicting the future. So we're very agnostic to what the future is. We do not have a crystal ball. But if we invest in 10 weird, wide, and early things, maybe 3 of those will become the next trendy thing. And, power law takes care of your returns. So what would it look like if we were wrong with those biases? For irreplaceable competency, you know, maybe large language models take off well enough, excuse me, take off well enough that, a high level generalist, a product manager who can manage multiple areas and string them together, but maybe isn't the world's best, but is just a jack of all trades, is the person who starts the next $10 billion company. I guess that's a possibility. Fundamental breakthrough, there's some data that deep tech investments take about 20 years. So you have a breakthrough in battery space, and then it's about 20 years for the patents and everything else to go through before that really takes off. One of the fun things, as an aside, in these spaces we look at, is there's nothing new under the sun. With the electrostatic clutches I mentioned, I think it was IBM who was working on that in the 1960s, right? And so it's always fun to ask entrepreneurs, like, who did this before you? And then regarding overlooked areas, it's just as applicable to public markets, but maybe you get cynical too early and you miss all that upside. And a lot of Monte Carlo simulations do show that, just buying consistently and not trying to predict the top is core. So we're thinking through that for defense right now. It's like, okay, there's some really cool technology in the defense space right now. Great market, a lot of headwinds coming together, but like, the founder of Palantir, like, he wrote a book. So it's like, if someone wrote a book on the subject, maybe it's time to look in greener pastures. So that was my partner in my kind of main conversation last week. So we're always trying to look over those assumptions.
And this is one of the things that's really different about venture from investing in, say, the public markets and equities and things like that. You are looking in for those areas that other people aren't investing in right now to get the upside potential in order to get those outsized returns that you need for venture. And this is what, Peter Thiel calls contrarian thinking. That can be
Mm.
really scary because you're running in the opposite direction of what most other people are doing.
Yep. Yeah, exactly. We're trying to catch those black swan events, you might say. And as a smaller firm, like we do have those constraints. We can't get into the later stage deals. We don't want to pay the price, the premium that's available for that. And so by being small and staying early, we compete with less investors and we're able to, get better terms and better up rounds. So yeah, I think it was, what did Teal say? Competitions for losers. So we definitely take that to heart.
So I think, and to go back to your point about defense, I think it's great that so many people are looking at defense tech as an area for investment. We've needed that for a long time. It is sort of the hot thing right now, which means that a lot of capital is probably going into the companies that aren't going to deliver the results that they might have before or that we were looking for. What are some other places that you're looking at though that you are think are overlooked that you're willing to share here?
Yeah, happy to. A number of areas that I'm interested in right now. And again, not claiming to predict the future, but as a armchair intellectual exercise to, practice my reps as a VC. I think it is helpful to build some theses. The hashtag on LinkedIn, oh gosh, was it deep tech micro trends? So I post a lot of this there when I can, but I think outpatient hospital facilities are a very interesting one. So people being able to opt out of health insurance systems rather than trying to innovate in the health insurance space is very interesting. Um, Synthetic nucleic acids is another one I'm looking at. Um, 3D printing specialization. So we've invested in 3D printing applications for wire harnesses. So the big wires that go into robots, cars, home appliances. 3D printing of high viscosity fluids, right? So sticky substances, which include monoclonal antibodies, stem cells, paints, for at home drug administration and other very important use cases. And then we've also done, you could call it 3D printing, but yeah, plasma etching and deposition for microelectromechanical systems. So everyone's investing in semiconductors, the quote unquote thinking part of compute. But what about the moving part, the actuation, the little gears and nanomachinery that goes along with that, all the sensors and stuff? Where's the investment there, right? So we invest in InchFab, Q5D, Acoustica Bio to get more exposure to those trends. Also looking at kind of the autonomy stack of the world, you know, what are the aspects of autonomous, or what are the layers of the real world that autonomous systems really haven't gone after? So very low Earth orbital, where you're getting high resolution, faster communication. I think that's a difficult space where you have enough atmosphere that there's drag, but you can still get those better quality images and communication. Um, Digging robots. I'm still looking for someone to put my power line underground. We've looked at three digging robot companies, three or four, and none of them have had the exact right approach or team. So that's one that I'm probably too strongly biased looking for. But every morning with my coffee, I see the power lines in my backyard. I'm like, man, like, can't a robot just put these underground for me?
Well, we should talk about that. There's actually an interesting company that we just got connected to that's doing that kind of work that I want to share with you then. And one of the exciting
Amazing.
things
Thank you.
about this space is not only that you get to work in these crazy industries and opportunities that are bucking the trend, but it's with incredible founders who, in my mind, really are the heroes of society as entrepreneurs. They're seeing opportunities that no one else is, and they're committing themselves to solving these giant problems affecting society. What what ways do you like to work with founders and support them? Given that, as you said, the very first thing you look for is that irreplaceable founder.
Yes, no, totally agree. I do think that the pattern matching of Mises and Ayn Rand is more helpful here than maybe Adam Smith or Karl Marx, right? Like you should kind of hold up and revere these people because they're incredibly amazing. And oftentimes their extraordinary character and skills clusters. So it's like they're not just great at one thing; they're great at like five or six things, and they're also charming and they have vision, introspection, adaptability, resiliency, integrity. So yeah, I get to work with top tier genetic specimens every single day. Um, Regarding the best way to work with them, I think kind of two things on the negative side first. So for one point, as an entrepreneur, please send your investors quarterly updates. For some reason, it's Aristotle's virtue of the mean. If you send me an update every month, then I'm like, why do you have so much time on your hands to update me every month? If I never hear from you, then I know there's something going wrong. And usually, when a company has a problem, they're either the monthly updaters or they're the never updaters. But the people who update you once a quarter and share the good, the bad, the ugly, where they need help. What's a good way to put this? They're practicing telling others the truth. And so they're more likely to tell themselves the truth, right? And you have these people who are visionaries who, are cult leaders, a bit manipulative and psychopathic to get other people to work 60 to 80 hours a week with them. You have to be, right? If you're going to change the world. And eventually they, use their own product. They believe their own lie too much and they could be in trouble. So, you do have to kind of pull your head out of the, what did they call it with Steve Jobs? The reality distortion field. And investors are a good place to anchor or tether yourself to ground truth and say, like, yes, these are issues. And that's where we can be helpful. And that's, in a professional level, that's on a personal level. People text me and call me on the weekends and they want me to talk with them or pray for them about different things they're going through. Like it happens, right? So
Yeah.
I try not to think of them as children. That'd be weird, but maybe nieces and nephews. Like it's a good way to look at it. Um, on the positive side, at least what our firm tries to do is we try to reinforce you with potential customers, potential advisors, potential talent, potential investors, right? Obviously, this is all potential, it's not actual, but we make introductions where we can. And my partner has an especially large network in the big tech space. I have a fairly good one with the universities and research facilities. And so between the two of us, we can usually find a way to close that gap. It even starts before we make the investment, actually. So we'll do a couple of due diligence calls, meet with the founder if we can, and then we'll have like a technical due diligence call. And the criteria for that is even if we pass on the investment, is this a good introduction for the founder? And that creates good faith. And they'll often, refer deal flow or have a good word for us in the future, right? It all comes back around. And that technical due diligence lead often, if it goes well, might become an advisor or a customer for those portfolio companies.
Amazing. Liam, there's so much more for us to get into, and I'm excited to see you in person tomorrow in Pittsburgh for us to get into that. But this is a
Indeed.
great place for us to begin here on the podcast. Thank you so much for sharing all this with the network.
Yeah, of course, Alex. Thank you for having me.